Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm so excited to be with you here today as we are going to be taking another fresh new look at the financial market. Now, before we go into the details, let's quickly run through our daily routine just to confirm that we are all on the same page. So if you can see my screen and you can hear my voice loud and clear without distortion, please let me know in the comment section by typing in hi. So when you type in hi, I get to get a positive feedback that everything is fine, and then we can start the session. And if things are not looking too good from your end in terms of the visuals and the sound quality, please let me know in the comment section and I will do the necessary adjustment. I look forward to your feedbacks in the comment section, and thank you very much as you do so. Okay, I can see a couple. Is it a couple of comments? I see some other comments here, and I see you, Carrie. Good morning to you. Thank you very much for that feedback. So that's simply, I will take that as a confirmation, and then we are good to go this morning. And before I kickstart the session, and due to the comments I'm seeing in the comment section, I would like to inform all viewers that we should be very cautious of individuals sharing contact details in the comment section, offering financial advice, and blah blah blah. Please, Extreme Speed does not endorse or take responsibility for any advice given by these individuals. So please, I want you to be very careful and refrain from engaging with unsolicited contacts for financial guidance. So please be aware of scammers in the comment section, and thank you very much as you do so. So it's on this note I welcome you all to yet another promising edition on the Extreme Speed Live, your daily dose of financial insight and trading strategies. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host, where we shall be deliberating on the financial landscape, looking at the chart from a technical standpoint, using our basic tools such as trend lines, key levels, and chart patterns to understand the behavioral patterns of market participants, and of course use that historical data to strategically position ourselves for the next move. And in fact, so far this week, we have been monitoring 4 financial assets on our watch list, which includes the USOILSPOT, the USTech100, popularly known as the Nasdaq, and of course the USDJPY and the XAUUSD. And remember, I did mention here yesterday that yesterday was going to be a public holiday in the United States. They are observing the President's Day, and due to that reason, the New York session was not open, and that could lead to subdued trading activity, which of course we saw how the market reacted during yesterday's trading session. It was a little bit slow, but finally we begin to gain some traction during the Asian session today. So we are going to be looking at this in detail today and see how we will be strategically position ourselves ahead of the New York session, which happens to be the first trading day for the week for the New York session. And one thing we are also going to be taking into consideration is the fact that usually when we have a public holiday, the following trading day usually has this tendency of having high volatility, as a lot of investors and market participants during the course of the public holiday would have placed some orders ahead of the resumption of the New York session, which could lead to high volatility. So we are going to be looking at the current structure today, taking all of this into consideration to strategically position ourselves for the next move. So I encourage us all to stay tuned in as I have interesting and simple trading setups that we will be using to guide our trading decisions for today. And for those of you who are joining us for the first time, you're highly welcome on board, and I'm very, very glad to have you around with us this morning. I know you will be wondering what this is all about and what is it that we are doing here on this particular platform. Well, as technical traders, we usually gather here every day, coming together as a community and engage in follow-ups and review of our current trading positions in preparation of the New York session. So it officially kickstarts 10 a.m. UTC, 11 a.m. West African time, and I recommend that you stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. And my aim here, of course, is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Trust me, the more time you spend with us in this community, the better you will become at comprehending our analytical approach and utilizing the information you gather here to make your own independent trading decisions and strategies. So once again, I welcome you on board and encourage you to actively engage in the comment section. So with that being said, here we shall be diving right into the business for today. And as usual, the first thing we normally do is to keep tabs with the fundamental factors that is likely going to be influencing the market sentiments today. And of course, right here on the economic calendars, we have fundamental factors that often manifest on the chart in the form of technical patterns and price movement. Now, by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. Now, based on the asset we are monitoring for this week, we have been focusing on economic features from both the United States and the Japanese economic docket. Now, in the last 24 hours, we really do not have any high impactful event, so I went ahead to include the mid-tier economic features, at least for us to have an idea into what participants are looking forward to before making any investment decisions. And when I did that for today, Tuesday, February 20th, we do not have anything from the United States, but we're looking forward to a couple of, I think a handful of events from the Japanese economic docket. However, we shall be deliberating and emphasizing on the major one that market participant will be looking forward to today, and that is the merchandise trade balance total. Now, this data is released by the Ministry of Finance, and it gives us a measure of balance amount between import and export activity. Now, usually a positive value shows a trade surplus, while a negative value shows a trade deficit. And of course, we all know how the Japanese economy is dependent on exports from their own economy and relies on a trade surplus too as well to boost their economy. And remember last week we saw the GDP from the Japanese, which wasn't very good at all, as it came in below expectation, giving us a contraction of about the economy contracted with about 3.3%. I think, I'm not sure, I don't have the actual figures right now. And the previous quarter too as well, we saw a contraction in that economy, technically saying that the Japanese economy is in recession at this point in time. So we look forward to see some positive news today as regards to the merchandise trade balance total. However, if we look at the previous data that came in for the month of December, we saw a positive 62.1 billion Japanese yuan, which is a promising figure as at that time. However, based on the latest development in the Japanese economy, economists are projecting a deficit of 1,925 billion for the month of January, which is not an encouraging figure at all. So it simply means that there is quite a lot of deficit on the table. This is what the projections are, but we're still going to look forward to see what the actual data is going to be like. Will it be just as expected, below expectations, or even beyond expectations? So this is one of the key event that we will be looking forward to. So I encourage you to save it in your calendar, save the timing so that we can be on standby to see how to capitalize on that opportunity. So with that being said, here we will be diving right into the business, and as usual, the first asset we will be taking on this morning is going to be the USOILSPOT, and thank goodness I already opened this one down so that we don't get too much time waiting for the chart to load up. So since the beginning of the week, we've had a situation where price has been confined within a range, and of course this was expected yesterday as we emphasized that the observation of the public holiday in the United States may bring in subdued trading activities, which could lead to extended sideways price movements, which of course is what we saw here. Now, right here on the 1 hour time frame, the first thing we did observe on this chart after trying to decipher how market participants are behaving since the new week began was the fact that price was initially confined within the $78 level and the $77.60 area to emphasize the prevailing uncertainty in the market at that particular point in time. And usually whenever we have this kind of range, it more or less tells us that there is an indecision going on. Hence, we want to exercise patience and wait for either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, in addition to this range here, remember we did acknowledge the fact that price action has been on a bullish trend, I think since the beginning of this month, which further gave us this ascending trend line after connecting the series of higher lows in this market. And you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we have no business selling this asset, as we'll continue to look out for patterns and structures that support the idea of buying. So with this understanding that price remain above the ascending trend line, we position ourselves at the breakout of the resistance line of the range at the $78 area to capitalize on an uptrend move. And in fact, we saw price break out of that structure a couple of hours into the US New York session in court, and in fact we saw our price came back multiple times to retest the structure, giving us a buying opportunity above the structure as we saw price move over 40 pips in our favor. And you know how we do it in this community. Whenever price action moves significantly well in our favor, we obviously want to move our stop losses and secure the current buy position. And if you had done that, you must have been taken out with a small profit, or at a worst case scenario break even if you had moved your stop loss to your entry zone. And that was where I moved mine to, and a couple of hours ago I was taken out of that position at break even. So I hope you did the same, and if you had done that, well done and kudos to you. Now, with the current situation we have right now, as price action right now has extended the range, the range started around the $78 area and the $77.60 level. Now it has extended into our key level at the $78.50 area to give us a wider range to work with ahead of the New York session today. Now, it's important for us to also understand why the market is behaving the way it's behaving and what are the various factors behind the scenes that are going to be affecting the market or has been affecting the market so far. Well, one of the major factors which we have been talking about for a long time now, since the later part of last year, was the geopolitical tensions in the Middle East, which has heightened concerns about potential disruptions to oil supply from the Middle East. Now, this of course is expected to bolster the price of oil, and of course we saw what happened yesterday. The week started on a bullish note, and yesterday we saw attacks from the Houthi rebels at the Red Sea. We also saw the Israel Prime Minister talking about more attacks on the Rafah enclave, which further is escalating the tensions in the Middle East. Then yesterday, the EU and the United Kingdom had a meeting and were planning to deploy troops to the Red Sea region to further curtail the insecurity in that particular area. So all of these factors will further support the stability of oil prices. Now, in addition to this, the energy market received some further support from positive economic development in China yesterday. Remember, China resumed from their 1 week long lunar holiday, and yesterday we had the People's Bank of China chose to maintain its 1 year loan prime rate, that's the LPR, at 3.45%, and then they also lowered the 5-year LPR by 25 basis points from 4.20% to 3.95% in efforts to bolster the recovering economy. And why am I talking about this? Well, we all know China being the highest importer of oil in the world, and depending on how the economy is doing will determine how the demand for oil will be. If the economy is rosy, the demand for oil will be high, and if the economy is not doing well, then the demand for oil will drop. Now, for those of us who are not financial literate, who do not understand what the implication of this scope by the People's Bank of Japan is, well, to simply put in layman term, the People's Bank of Japan have decided to keep the interest rate for loans for 1 year at the same at 3.45%. This means that if someone in China wants to borrow money for a year, they will still have to pay the same amount of interest. However, the People's Bank also lowered the interest rate for loans that last for 5 years by 0.25% from 4.2 to 3.95. This means if someone wants to borrow money for a longer period like 5 years, they will now pay less interest on that loan. Now, this decision is made to help China's struggling economy by reducing the interest rates. The People's Bank of China hopes that more people and businesses will borrow money. When people and businesses borrow money, they tend to spend more, invest in new projects, and expand their businesses. Now, this increased spending and investment can help stimulate economic growth and support the overall economy of China. So, participants in the energy market are looking forward to the outcome of this to further give some cushion to oil prices. Now, we also learned of the annual tourism, as we saw a notable increase in annual tourism revenue during the National Lunar New Year holiday period, which of course also has bolstered the economy as well. Now, given these factors, how do we intend to position ourselves for the next move? Everything here supports the idea of buying this asset. Now, how do we look at things from a technical standpoint? Now, for those of us who missed out on our earlier session, let's quickly run through the higher time frame so we can have an holistic perspective into what is really going on in this market, and at the same time be on the same page with us that is those who are not part of our live session. So hold on a second. Am I okay? Good. So here we are on the daily time frame, and what we did here, after taking into consideration the character of price action since the month of August of last year, you will see that price action, we have a key level bit at the $78.50 area, which of course had played a major role in determining the direction of price action in the last seven months, I think. I hope I'm correct on that one. And if you look at this closely, you will see that this level at some point in time has been a strong buying niche in this market. Look at what happened in July and August. Now, not until the month of November of last year, we saw price break down the structure, and since that moment, price action had remained below the $78.50 area to emphasize the strength of the sellers at this particular point in the price level. Now, looking at what happened last week, despite the strong bullish momentum we capitalized on last week, we saw that as soon as price got into the $78.50 level, we saw selling pressure resume from that area. Now, this further buttresses how strong the sellers are in this market and how crucial this juncture is. So we had to use this level as our key level for the week. Now, if continued selling pressure persists below that structure, it could lead to more selling opportunities, and if price breaks out of that level, we may be looking out for opportunities to buy. Now, in addition to the key level is the ascending trend line we identified here. After noticing that despite the strong bearish momentum, the beginning of the month of December saw buy pressure resume, negating all attempt by the sellers to break through, hereby giving a situation where price action is gradually transitioning into a reversal pattern, where the neckline of this reversal pattern will be the key level at the $78.50 area. Now, the breakout of this key level and neckline will be validating this reversal pattern. Now, with the information we have gathered here, scaling down into the 4 hours time frame. Okay, on the 4 hours time frame, what I did here was to take into consideration the nature of price action since the month of February began, and it's quite obvious that price action has been bullish. As you will see, after connecting the series of high and lows, we have a couple of ascending trend line to work with, and we'll definitely continue to look out for patterns and structures that support the idea of buying if price remains above the trend line. Now, the only condition that will make us sell this asset is for price to break down the ascending trend line, after which we will be willing to join a bearish move. But as it is right now, price action is currently oscillating just right around the ascending trend line, making it a critical point for us to reference on. Now, to further see things more clearly, we will be scaling down into the 1 hour time frame, where depending on the nature of price action, or depending on how market participants are reacting to the structure this week, will determine how we will be positioning ourselves for the next move. Well, personally, you can see that the ascending trend line here on the 1 hour time frame has already been broken to the downside with an engulfing bearish candle, as you will see here. Now, personally, I missed out on this opportunity at the breakdown of the $78 area, but it's okay. The week is still very early, hence we can still see the market give us a privilege of being part of that position. However, if you in any way are taking advantage of that opportunity, well done and kudos to you. So as it is right now, and for those of us who missed out on this opportunity, we would like to wait for price to come back, maybe to retest the structure and give us an opportunity to join that downtrend move. So we want to see something like this, price coming back into either the $78 area or the ascending trend line, where the inability of buyers to break above the $78 area or the ascending trend line will be all we need as a confirmation to join the decline to the downside. So this is what one of the idea we will be looking out for today. Now, if price does not come back into the structure, of course, it's not all the time that price follows the theoretical expectation. And instead, if price continues to drop, we have a stop loss right below the structure, which appears to have been triggered right now. And let's see how far the momentum will go. So at this point in time, things are looking very bearish, as you will see the continued selling pressure at the $78.50 level has led to the breakdown of this ascending trend line for the first time this month. So we shall continue to maintain a bearish bias at this point as price remains below both the ascending trend line and the $78 area. However, if we are going to consider buying this asset, where is it? Where and what level are we going to be looking out for buying opportunities? Well, if you would ask me, I'm of the opinion that I will need price action to take out all the sell positions at our key level at the $78.50 area before considering buying this asset. So we want to see price break out of the $78.50 area before any consideration of buying opportunities. So I want us to keep this in mind. Mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So this is my simple view on the US All Spot for today. I hope I made myself clear. And if in any way you have questions or you need some clarifications as regards to this current setup, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off to see if there are any questions before we move on to the next asset on our watch list. So stay tuned in while I wait for your comments. All right. So in the absence of no questions, I want to assume that we are all on the same page. I see you, Gozali. Good morning to you. I see you, Candisoid. Good morning. Glad to have you guys around with us this morning. So with that being said here, let's move on to the next asset on our watch list. So the next asset on our watch list for today is the USTech100, popularly known as the NASDAQ. And we have quite an interesting situation going on right now, as you will see that price action since the Asian session beginning to find selling pressure, resulting in price action breaking down our key level for the week at the 17,650 to set a bearish tone for the first half of the week. Now let's run through what really happened during our live session yesterday and what we saw and said we will be using to guide our decisions going forward. Now, during our live session yesterday, the first thing we did observe was that price action was trading above our key level at the 17,650 $650 area. And following the fact that price remained above the key level, we saw here how price action was initially confined within that range between the 17,745 and the 17,670 area to emphasize the prevailing uncertainty in the market at that particular point in time. And usually whenever we have a range like this, we usually exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, with our orders placed at both ends, we initially had our buy stop order triggered at the break of the 17,745, and of course that position did not do very well as we saw price drop to the downside, taking us out of that first buy position in a loss, and went ahead to trigger our first sell position for the week at the breakdown of the 17,670. We also saw the breakdown of the 17,650, giving us two sell positions for the week. And interesting enough, if you had missed out on the first breakdown, we saw how the market came back to retest structure and then the momentum continued to the downside. Now, for those of us who capitalized on this opportunity, well done and kudos to you for being on standby, as you currently should be having a minimum of two sell positions running in profit at this point in time. So the first position here is running with about 93 pips in profit, while the second position is running with about 70 pips. So we have roughly over 150 pips in profit, which is not bad to start the week with. So at this point in time, I'm going to be encouraging you to move all stop losses to somewhere around our key level to secure this current sell position, as we never can tell. Anything could happen as market participant anticipates the reopening of the US session today. Now, with a well-secured position at this juncture, what is going to be our plans for today? Will this bearish momentum continue to push further to the downside, or is this going to turn out to be a false breakdown that will incite and become a platform for new highs? Now, before we go into the details here, let's run through our daily time frame just to have an holistic perspective into what is going on in this market. Now, during our live session yesterday, we took into consideration the nature of price action since the month of November. That's an historical data of about 4 months, I think. Yes, 4 months to be precise. And during the course of the 4 months, we can see price action had uniformly and consistently found higher highs and higher lows. And when we connected all the pivot lows here, we have a beautiful ascending trend line to work with. Now, in addition to this trend line, were a couple of levels here. The most important one, which is our key level, situated at the 17,650, a zone which had played a major role in determining the direction of price action in the last 3 to 4 weeks. Look at how this level was initially a selling niche during the last week of the month of January, selling niche around here. And during the beginning of this month, we saw the breakout of this structure. And in fact, for the first 2 weeks, this level had been a strong buying niche. And before we finally saw price break down the structure at the beginning of the week. So we had the breakdown of both the ascending trend line, which happens to be the first time price will be breaking down the ascending trend line. And of course, our key level had the 17,650. Now, with the situation we have here, remember what I said here yesterday, that we are at a crucial juncture where both our key level at the 17,650 shares a confluence with that ascending trend line, and that if price breaks down both of the structure, it will be a beautiful signal for us to join a bearish move to the downside. And as it is right now, we are already in a sell position with the hope that price may continue to find lower lows at this point in time. Now, we cannot ignore the fact that price action is at an all-time high. Remember, price tested the $18,050 area last week Monday. That was the first time price will be getting into the zone. And from a psychological perspective, we do know that when price finds a new high, it usually takes an extended period of time before market participants acclimatize to this area. Now, due to this and out of fear of a crash from this area, those who had bought this asset prior to price getting into this level may want to start taking some profit off the chart out of fear that price may crash anytime soon. So as a result of this expectation, we usually see price action evolve into choppy market conditions, retracement phase, and consolidation phase. And this has been what's going on here in the last couple of weeks. And now, with the way things are going right now and the inability of buyers to even come close to the previous high here, we may likely be seeing a reversal setup gradually unfold on our chart, where the neckline of that reversal pattern interestingly shares a confluence with that key level at 17,650, where we will need a breakdown of this neckline area to validate the potency of that reversal pattern. So you would agree with me that we are at a crucial juncture in this market. Now, with this information we have gathered here, let's scale back down into the 1 hour time frame where we will be seeing things more clearly. So this morning, while I was dissecting this current market structure, I added another level at the 17,610 area to maximize the potential of this bearish moves, because as at the time I was analyzing this, that level was the lowest point where I was noticing buy pressure here, and since price broke down the structure, it triggered my thought position on this particular asset. And if in any way you had identified the setup, that is tremendously wonderful for you. Well done. Secure your positions right now and let's see how far this momentum will go. Now, with the way things are going right now, and for the fact that price still remains below our key level, we shall continue to maintain a bearish bias. Now, for those of us who missed out on this breakdown, well, let's wait and see if the market will come back and retest the structure to give us more opportunity to sell. So we shall be looking out for something like this, and if we notice selling pressure on our 15 minutes time frame, we shall be joining more selling opportunities in this market. Now, to make things easy for us to be able to monitor this trade, let's acknowledge this descending trend line here. So if you look at the structure, bringing out my line chart, you will see that we have something like this right here. Hold on a second. So we have something like this. So we have, let me extend this out a little bit and then bring back our candle chart so we can do some little adjustment to emphasize the strength of the sellers here since last week Friday. So I would like to thicken this one a little bit, as this is going to be serving as the major descending trend line, where the lighter one will be serving as the temporary trend line at this point. So now, with a descending trend line in place, you know how we use our descending trend lines in this community. As long as price remains below this descending trend line, we have no business buying, as we shall continue to look out for patterns and structures that support the idea of selling. So even if we see buy pressure resume, remember this trend line here could still be a barrier for buyers, and look at how beautifully it shares a confluence with our key level at the 17,650, and if continued selling pressure happens around that area, it could incite more selling opportunities here. So let's put this in mind while we continue to monitor price action. Now, in as much as we expect some bearish momentum in this market, we cannot ignore the potential that buyers could come in. And if buyers are going to be coming in here, what are the conditions that will make us feel comfortable buying this asset? Well, the first and first here is the need to see price break out of the key level, which interestingly would also have broken out of this descending trend line. And in fact, if price breaks out of this descending trend line, it will be a clear signal that the trend line may no longer have the capacity to continue to negate the bullish attempt, hereby giving us opportunities to join an uptrend move from there. So the only condition that will make us buy this asset is for price to break out and retest both the descending trend line and the 17,650 for any opportunities to buy here. Unless this happens, we are not going to be considering buying here, as everything is looking bearish at this point. So this is my simple view on this asset for today. I encourage you to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 5 to 10 seconds to see if there are any questions before we move on to the next assets on our watch list. So I see you, Freedomi Pix. Good morning. Man5351, MLero716. Good morning to you guys. Glad to have you around with us this morning. And trust you're doing very well over there. All right. So in the absence of no further questions, we shall be moving right into the third asset on our watch list for this week. All right. So in the absence of no questions, I want to assume that we are all on the same page. And in that regard, we shall be moving on to the next asset. So the next asset on our watch list for this week is the USDJPY, and the last 24 hours has seen us buy this asset actually, and if you had moved your stop losses accordingly, you must have been taken out on all buy positions by now. Please, if you have not yet moved your stop losses, please do right away and secure all positions at this point in time. So yesterday we saw the situation here where the week started on a strong bearish note. Price started at around the 150.285, as you will see here, and dropping into the 149.875 to give us a bearish bias at the beginning of the week. And another factor that supported this bearish bias was the breakdown of this ascending trend line right here that we identified on the higher time frame. We are going to be going into that in a moment, and let's just quickly run through what really happened here. Now, yesterday I did emphasize that if price decides not to break down the support line of this range right here, well, a reversal setup will be all we need to join an uptrend move. And I said we will be using the 150.100 to capitalize on that opportunity, and then had more buy positions if price ever breaks out of the 150.285. So as at this morning, we had about 2 buy positions running before this bearish pressure came in, taking us out of all the positions we have. Now, at this juncture, what plans do we have for today as everyone prepares for the first New York session for this week? Now, well, there are various factors here that is affecting this asset. Remember, with inflation surpassing its 2% target for over a year, the Bank of Japan has hinted at ending its negative interest rate policies in the near future. A couple of weeks ago, is it 2 weeks or 3 weeks ago, I did emphasize the opinion of the Bank of Japan's governor as regards to pivoting from their current ultra loose monetary policy, and he was looking at somewhere between March and April before this could happen, hereby giving some glimmer of hope to buyers of safe haven Japanese yen. However, he also buttresses this on Friday, last week Friday, where he said the central bank will assess continuation of various easing measures, including negative interest rate, as the achievement of the price target looms. Meanwhile, on the other side of the pond, the Federal Reserve Chair Jerome Powell has pushed back against expectations of interest rate cuts, with investors now eyeing the possibilities of the first rate cut as early as the month of May or June of this year. So initially, remember at the beginning of the year, we were looking at an interest rate cut in the month of March, but the resilient U.S. economy following robust data coming in week out from the U.S. economic docket projected a stickier inflation, and that culminated last week when we saw the CPI data come in a little bit beyond expectation, and that resulted in some positive traction in favor of the US dollar. And the idea of a higher CPI had given the opinion of high inflation rate, hereby inciting the idea that the Fed may likely leave interest rate higher for an extended period of time. Now, with this idea in mind, the dollar may likely continue the uptrend move. But if we look at things from a technical standpoint, things are looking a little bit bearish since the new week began, as we saw price action break down the ascending trend line. Now, let's scale up into the 4 hours time frame here to see how we will be positioning ourselves for today's trading session after taking an holistic view into what is going on here. Now, remember that we did acknowledge that price action has been bullish since the beginning of the year, but right here on the 4 hours time frame, what we did was to take into consideration the nature of price action since the beginning of the month of February. And it's quite clear that the market has been bullish, as we did connect the series of higher lows, giving us this ascending trend line to work with. And you know how we use our ascending trend line. As long as price remains above the ascending trend line, we want to continue to look out for patterns and structures to buy. But the only condition that would make us sell is for price to drop below the ascending trend line. Now, if we zoom into this current structure, you will see that something interesting happened at the beginning of this week. We saw price action break down the ascending trend line for the first time right at that confluence at the 150.100 to incite a bearish signal. And from a technical standpoint, whenever we have a breakdown of an ascending trend line like this, we expect that price may likely come back to retest the structure in an attempt to incite a downward continuation. Now look at what happened here about 8 hours ago. We saw that as soon as price got back into the ascending trend line, we saw a retest of structure as selling pressure resumed again from that area. Now, the question going into the New York session today is, will this be a sign that sellers are beginning to gain momentum here, or will this turn out to be a false breakdown outrightly? Well, first of all, we need to acknowledge the fact that since price action tested that highest point this year at the 150.800, price action had consistently found lower highs, giving us a situation where buyers are losing that momentum. Now, when we look at this from a technical standpoint, we do want to be connecting the series of lower highs here to give us a trend line to guide our trading activities going forward. Now, looking at the structure here, hold on a second, please. So I will extend this a little bit up, a little bit. Okay, so we have a descending trend line to work with going forward. And you know how we use our descending trend line. If price remains below the descending trend line, we have no business buying this asset. So now let's scale down into the 1 hour time frame so we can see how market participants are reacting to this beautiful confluence where both the ascending trend line and the descending trend line met. Now look at what happened here. Selling pressure resumes. And what I did this morning was to position myself below the 150.285, which interestingly shares a confluence with this ascending trend line I spotted here this morning. So after connecting the series of higher lows in the last 24 hours, we have this temporary ascending trend line, which appears to have been broken right around the 150.285 for me to trigger my first sell position for the week. Now, for those of us who had missed out on this opportunity, it's okay. The week is still very, very early. Let's see if the market will come back to retest the structure that was broken. And if it does, we want to look out for patterns on our lower time frame to join a bearish move to the downside. So what this simply means right now is that as long as price remains below the 150.285, we shall maintain a bearish bias in this market, and of course look out for more opportunity to sell if price action goes ahead to break down levels such as the 150.100, and of course our support line for this week. This is the lowest point price action has been for this week. If price goes ahead to break down, retest the structure, we will be adding more sell positions to our existing trade. So this is how we are going to be managing a bearish bias today. As long as price remains below the 150.285, we maintain a bearish bias and look out for more opportunity to sell as a breakdown of the 150.100 and the breakdown of the 149.875. So please kindly mark out these levels as you will be needing them to guide your trading decisions going forward. Now, if price action does the opposite, it's not every time the market does what we expect. Sometimes we could get some surprises and price continues to find higher highs. Well, the only condition that will make us buy here is for price to take out the highest point for this week at the 150.450 before joining any bullish move here. Excuse me. So I do have a buy stop order above the structure to capitalize on the uptrend move. So let's mark out this level too as well, as this will guide buying opportunity on this particular market. So this is my simple view on the USDJPY for today. I hope I made myself clear. But if you have any questions whatsoever, feel free to let me know in the comment section. Trust me, I'm here and willing to be of help in that regard. So I look forward to your comments in the comment section. So I will be taking the next next 5-10 seconds off to see if there are any questions before we move on to the final asset on our watch list for today. And you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right, so I see your comment, Malalela. Good morning. I hope I pronounced that correctly. Please pardon me if I didn't. So you said here that USDJPY buy or sell for 30 minutes. Well, I think I just explained that. Probably you dropped your message earlier before my explanation. So we are looking bearish at this point in time. Anywhere as long as price remains below the 150.285, you can look out for patterns and structures depending on your approach to trading to position yourself for the bearish move. And the only condition that will make us buy this asset is for price action to break out of the 150.450 before joining any bullish move. So this is our view for today on the USDJPY. I hope you got me clearly. Lover, good morning to you. Elmio Somi, good morning to you. Glad to have you around with us this morning. So in the absence of no further questions, I want to assume that we are all on the same page, and in that regard we shall be moving into the final assets on our watch list for today. So the final asset on our watch list for today is the XAUUSD, my favorite asset, popularly known as the gold spot. And what a phenomenal 24 hours we have here on this particular asset, as we have a minimum of 2 buy positions running in profit at this point in time. And of course, the price of gold is showing an increased momentum leading up to the release of the FOMC minutes coming up tomorrow. And in fact, this is coming to me as a surprise at this point in time. So for those of us who had capitalized on this opportunity, kindly move your stop losses right now to that area, the second entry zone around the $2,023 area, securing your positions while we continue to monitor price action. And of course, the reason why I'm surprised is, well, we know we all are aware of the recent robust U.S. economic data exceeding all expectations. And of course, we know how market participants have tempered their anticipation for interest rate cuts. Now, this shifts is expected to lend support to the US dollar as the economy resumes following yesterday's public holiday. Now, at this point, it is very, very important to exercise caution and protect any of our buy positions right now, as this shift in expectation could potentially constrain the upward movement of gold prices. So I will just encourage us all to secure all positions right now. Now, going into the structure from a technical standpoint, remember what we said here yesterday. We said that the week started on a strong bullish note. Remember, we saw price started the week around the $2,010.50 level. And as soon as price tested the $2,023 area, we begin to see selling pressure resume around that point. Now, there are two factors here we saw that made us to identify that area between the 2015 and the $2010.50 area has a temporary demand zone to look out for buying opportunities. So one of the factors here is this descending trend line we projected on the higher time frame. So I will be showing you that in a moment when we scale up into the higher time frame. So at the beginning of the week, we saw how price broke out of this descending trend line, which is a very beautiful sign that price action may begin to gain some bullish traction going forward. And coupled with the fact that price action was trading above the ascending trend line, it was all pointing at a bullish expectation yesterday's trading session. But we never knew that this could it could happen so fast, as we were expecting subdued trading activities due to the New York, the public holiday in the United States yesterday. So as a result of this beautiful confluence here between both the ascending trend line and the descending trend line, we did mark out this area between the 2015 and the $2010 area has a temporary demand zone where we said we will be looking out for reversal setups to buy around that area. Now, with a buy limit order at the 2015 and of course at the $2010.50 area, we only saw the $2015 area got triggered, and since that moment price had continued to find new highs, and then going ahead to break out of the second level, we said we will be adding more position, which is the $2023 area. So it has been quite a tremendously profitable start to the week for us all, as the first buy position is currently running with about 120 pips in profit, while the second buy position is currently running with about 35 pips, giving us a total of 155 pips in profit on this particular asset. So I encourage us all once again, kindly move all stop losses right now. Let's secure this current buy position somewhere around the $2023 area, while giving enough breathing space for price action to move around. Now, with the well secured position at this juncture, what is going to be our plans for today? Are we going to continue buying, or are there chances that sellers could come in at any point in time? Well, first of all, I want to emphasize how surprised I am based on the fundamental factors behind the scenes why price is climbing high, but we may be seeing this as in a reaction to the geopolitical tension in the Middle East, which continues to gain traction over the last couple of days now. Now, with the situation here, let's quickly run through the higher time frame to see what things are looking like from an holistic standpoint. Now, right here on the daily time frame, this was where we started our analysis yesterday. And after taking into consideration the nature of price action since the month of August of last year, we did confirm that the market has been very bullish. And after connecting the series of higher lows, we have this ascending trend line to work with. And as long as price remains above the ascending trend line, we shall continue to look out for patterns and structures to buy this asset. Now, in addition to this ascending trend line was our key level situated at the 1,985 level, where you will see that since the month of June of last year, price action, this level had been a major determinant of price action. So in the last 7-8 months, this level has continued to determine the direction of price action. Look at what happened here in the month of June. It was a selling niche. Month of July, it was selling in the month of July too as well. And though we had some choppy situation here in the month of October, but more of selling too as well. And not until the breakout in the month of November happened, price action has remained above the structure to further emphasize the strength of the buyers in this market. Now, despite the strong bearish momentum following the CPI data from last week, we saw how as soon as price tested both the ascending trend line and that key level, we saw buy pressure resume again from that area. So that confluence there is a very crucial moment for us in this market. Now, scaling down into the lower time frame, we notice here on the 4 hours time frame how in the last 1 month price action has been finding lower highs and lower lows, hereby transitioning into a descending channel. When we connected the series of lower highs, we have the resistance line of that descending channel, and when we connected the series of lower lows, we had the support line of that descending channel. Now, during the course of last week's trading session, we saw our price action closed exactly at the resistance line of that descending channel, and then when we look at the price level, it was exactly at a $2,015 area, a level which had played a major role in determining the direction of price action in the last 1 month. Now, what we were talking about here yesterday is that if price action can go ahead to break out of both the resistance line and the $2,015 area, it will be a beautiful opportunity for us to join an uptrend move, and thank goodness we were able to capitalize on that opportunity. Now, once again, congratulations to everyone who had capitalized on this move. So as it is right now, price action is currently trading around the 2028 level, closer to that area. So this is the 2028 level right here. So I would like to acknowledge this level, and we are going to be using it to guide our trading decisions going forward. So quickly, as I'm talking right now, mark out these levels on your chart. We are going to be having a buy stop order above the structure to capitalize on that uptrend move if price goes ahead to break out of that structure. So that is that on this one right here. And there are two ways to which we can capitalize on this one. For those of you who have been with me for a while, you know what I'm talking about. But for those who are joining us for the first time, let me quickly explain why this is so. Now, for those of us who are profitable so far this week, we can afford to leverage on some of the profit you had made so far this week to test waters above the $2,028 area and see if it's going to work. So if price breaks out of the $2,028 area, we have a buy stop order triggered. So, and if it doesn't work, we know that we are only risking some of the profit we had made so far this week. However, if you are new with us in this community, I would encourage you to exercise patience and wait for a retest of structure before jumping into any buy positions here. So as it is right now, we're going to maintain a bullish bias on this particular asset. However, in as much as we're looking out for buying opportunities, we should not ignore the potentials that sellers could also come in at any point in time. And in that regard, we do want to see how the market participant will react to the $2,028 area. Now remember, I just showed you what happened on the 4 hours time frame, where that level had played a major role in pushing price to the downside. So let's see how the market will react to that structure. If we see any form of reversal pattern around this area, like double top structure or double top structure, or head and shoulder patterns, or falling wedge, whichever case, then we might be in to sell as the New York session draw near. Now if we see a reversal pattern there, we mark out the neckline and then sell the breakdown of the neckline. But if price can break out of the 2028, retest it, we shall maintain that bullish bias on this asset. So please, I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions whatsoever as regards to the setup or any of the setups we talked about today, feel free to let me know in the comment section. So as always, I will be taking the next 5 to 10 seconds to see if there are any questions before we start rounding off on today's Extreme Speed Live technical analysis session. All right. I see your comment from Jonomix to 325, Olis, Sandra 49, Rashid, Fab 971. I see all your comment, guys. Thanks you for bringing up the energy in the comment section, and glad to have you around with us this morning. So for those in the absence of no further questions, I'm of the opinion that we have come to the end of today's XAUUSD Live technical analysis session. In fact, it has been a wonderful moment with you guys as we were able to take on the 4 assets on our watch list for this week, which includes the USOILSPOT. We talked about the USOILSPOT earlier. We talked about the USTech100. We talked about the USDJPY, and finally the XAUUSD, where we were able to identify simple trading setups using our basic tools such as the trend lines, key levels, and chart patterns to strategically position ourselves for the next move. And I do hope you are able to mark out these levels as we've illustrated during the course of the session. If you have done so, well done. Kudos to you for doing that. So all we just need to do is exercise patience and allow the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding, you do want to be having a well-defined risk management strategy in place to mitigate against any risk on your portfolio. For those of us joining us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. If you did, you sure want to be part of our subsequent editions. As trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information to make your own independent trading decisions. So I look forward to seeing more of you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing, and of course prepare ourselves for tomorrow's trading session, which promises to be another exciting one, as everyone in the market will be looking forward to the publication of the FOMC meeting minutes, which of course has a tendency of bringing some liquidity into the market. So you do not want to miss out on that session. So I look forward to seeing you guys tomorrow, same time as always. So it's on this note I want to wish us all the best of luck today. It has been a wonderful moment with you. I really appreciate every single moment I had with you. So see you all tomorrow. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.